Good morning, everybody. Welcome. It's the 4th of January. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, mate. Good
How you
morning.
doing?
Yeah, good, thank you.
Good, good. Interesting first day back yesterday for the markets. Plenty of volatility for us to digest. And yeah, it's quite an interesting start to the year, I thought.
Yeah, overall it was. There's some decent moves in there, and yeah, can't wait to get stuck into the rest of the week. I think there's plenty of volatility. We got Fed minutes out later, I think, and
That's right.
non-farm at the end of the week. So yeah, lots to keep us occupied.
Absolutely. So with that, let's get into the latest headlines, see what's moving markets over the past 24 hours, and then we will dive into some charts and have a look at how they're setting up for the rest of the week. So first up, we had German inflation declining. The consumer prices declined 0.8% for January, compared with expectations of a 0.3% decline. So the year-on-year rate dipped to 8.6 from 10%. So that was well below the expectations and the lowest reading for 5 months. So that is pretty good news indeed. We've got Eurozone CPI inflation, which is due on Friday. So we'll be keeping an eye out for that. As a result of all this, the German bond yields declined, with the 10-year yield just above 2.4% from 2.57% at the end of last year. And the US bond yields continued to decline also to around 3.73 from 3.85. As Steve and I mentioned at the start, there has been some very choppy trading, notably in the FX markets. As a result of the reopening yesterday. Portfolio adjustments at the start of the new year were also a significant element during the day, with particular sharp moves for major currencies. European currencies declined sharply. The dollar posted sharp gains on Tuesday's European Open, with a slide in the euro, sterling, and Swiss franc. The dollar failed to hold on to its best levels of the session, with lower energy prices helping to underpin the European currencies. The Bank of Japan has capped yields. It's been in the news for a while now. Been talking about them coming up with a less aggressive policy stance and potentially some more intervention. The Bank of Japan engaged in another round of unscheduled bond buying yesterday to cap yields, and Governor Kuroda insisted that the bank would continue to ease monetary policy to meet the inflation target. There were, however, reports that the Prime Minister would review the inflation target with the next bank governor, who is due to take office in April. We've got Federal Reserve minutes later today, as Steve mentioned. That's going to be really the key event that the markets will be gearing up to today. That's going to be at 7 p.m. UK time, and they'll release their latest set of minutes following the December policy meeting. The narrative on inflation and interest rates will be closely watched and have an impact on market expectations. We've also got the latest ISM manufacturing data, which is due later today, which will be important for confidence in the US economy. And we've also got some jobs data due later today as well. Okay, so plenty happening. Let's get into some charts, Steve. Let's have a look at what's going on with the crypto world to start with, and see if there's any opportunities presenting themselves there.
Okay, mate. Let's take a look at. Let me share my screen first. Take a look at Bitcoin. So Bitcoin had quite a decent rally really overnight. This has happened. Yesterday was a bit nothing really going on. I've actually changed my charts around a little bit. I've got all of our OANDAs up here, Joe. It's something we'll talk about. We were talking about opening a live account. There might be something quite interesting in this. They show Bitcoin. You can't actually trade it unless you're a professional client. But yeah, anyway, moving averages, we're below all the moving averages on the daily chart, 5,500, 200-day accelerating lower, and we've got this sort of like sideways price action, which seems to have been going on forever. It's only the 10th of November, so it's only a couple of months of this sideways price action. But we seem to be really struggling to get above this 18,200 level. We poked our head above it on the 14th of December, formed a shooting star formation, and then propelled lower. Still under a lot of pressure, although as I say, we've had a minor uptick overnight. Price action on the 4-hour chart is very sideways, under the cloud at the moment, and there we see the sort of like the pop-up that we did have. Still a lot of work to do. Support really coming in around about 16,271. And we need to break it there before we open up the downside. Overall, we're negative on Bitcoin, as we've talked about so many times before, with expectations of a move to at least 12,500 over the coming weeks or months on Bitcoin. Let's take a look at gold. actually, let me just get rid of these. This sidebar just like confuses things. So gold, this is a weekly chart on gold, and we can see that it's breaking up and it's looking to retest the higher levels now. We've taken out the 1830-34 level, which was significant, and we're pushing aggressively higher this week. Next real form of resistance is around about 1880. And that should at least put a short-term stall in for the accelerated move higher. And yeah, looks pretty buoyant overall. As mentioned, we had a inverse head and shoulders formation. Actually, let me hop back to my other charts because um, it looks exactly the same. So maybe it is. That's why it's all coming through like the way it is. Daily chart. We've got the measured move target, which we hit yesterday, 1844. That was the double bottom. Inverse head and shoulders formation, however, would be a little bit different. Let's get a measured move on that. We'll take a move from the head up to the neckline. Measured move target for the inverse head and shoulders formation is 1966, but really it's a really uncomfortable looking one. I wouldn't sort of like lay my hat on it. So, but they're the targets that we've got on the upside. As you can see, 1900 also forms quite a bit of resistance that we've had before, but in the interim, 1880 would be key. We've got a crossover on the 5500-day moving average and looking like we could be heading towards a golden cross, which would be the 55 moving up through the 200-day moving average. Silver's stalling just in front of the measured move target of the inverse head and shoulders, and that comes in just below the $25 level, although the last 5 days have resulted in higher closes. Well, today hasn't closed yet, but it's pumping up quite aggressively at the moment, 24.26 trading, and further upside expected. And the resistance above there is anywhere between the $25.50 all the way up to $27. So again, plenty of resistance to run into, but what a sort of like great reaction from these lows that we were talking about all the way back in October. Copper still really can't get above the 200-day moving average, so remains under pressure again. We've had 4 negative days of price action. Today looks a little bit more positive, but yeah, support just below around about 375, and the resistance coming in the shape of 396 to $4. $4 just a significant psychological level. Above that, we should have sort of like a further resistance, but yeah, overall it looks constructive. That's all I can say about copper. It looks constructive, but it's not really having that push above 396 yet. We had a bearish outside candle on WTI crude oil yesterday. You can see it here, hit the 55-day moving average and moved lower, and we've accelerated down today, 75.75 trading. Now it's already Wednesday. We had a Monday bank holiday. I'm not sure whether oil inventories has been delayed or not. Whether sometimes it gets delayed till Thursday. Maybe we can have a look at that, see if that's out in the sort of like expected results later. Brent crude oil, same price action, obviously trading at a premium to $5 premium it's trading at to WTI crude oil, but the same kind of formation yesterday, bearish outside candle in front of the 55-day moving average. So pretty negative looking, and looks like we could be under further pressure going into today. Trading at 80.80. The spike low we had in early December got down to $75, so only $5 away from that. And natural gas has continued that aggressive move lower. I mean, since when was it? Middle of December. It wasn't long away. We were trading up at $7. We've nearly halved. So 387 trading. Really nice topping formation that we had. Broke that neckline at 533, which was quite a decent break. We highlighted that on the show, and has continued lower. So just really the sort of like support coming in at 355. That should form a little bit of a barrier on the downside, but it's like trying to catch a falling knife. I wouldn't really recommend it. Yeah, I suppose let's see how the dollar's getting on really, Joe, because this is one of the main drivers of these commodity assets.
Yeah, at the moment you're right, it is. And looking at the daily chart, you can see here that we're still talking about this head and shoulders top pattern that has played out. We've seen the breakdown on the dollar here at this point, this point here, which was on the 1st of December. And since then, prices have been moving lower within a kind of wedge type formation. But yesterday we saw a breakout of that wedge to the upside with a really powerful candle. So today we're trying to reverse most of that, and we are now trying to retest the reverse side of the broken wedge pattern. So if this is to play out, and we are expecting a corrective move higher on the US dollar, now is the time to be thinking about buying it, because we're getting the retest of that wedge, and therefore we could begin to move higher. I do believe it's speculative, because overall I think the pressure of this head and shoulders top is going to dictate the longer term price action in the US dollar. But in the short term, I do believe there is potential for a reasonable correction, maybe as high as these levels here, as up to sort of 107.50. So if you are on board with that theory and believe that these lows here at around 103.45 are going to hold, then from a risk reward perspective, buying or getting long of the US dollar against any major currency with a stop loss, thinking about if it breaks down below these lows, we want to get out of these trades because it's going to invalidate this theory of a dollar correction, then maybe now is the time to think about doing that for optimum risk reward. Let's take a look at Euro US dollar. We can see here that yesterday we saw a negative candle. We seem to be forming some sort of top in the very short term. We can see price action has been quite sideways throughout this period here, starting really in mid-December. Yesterday we saw a big move to the downside, taking out the support level at 105.75, but today we're having another go at trying to get back above that level. It's still very early in the sessions. We are over halfway above the candle that we posted yesterday. So whether there's anything in that or not, I'm not sure. But yeah, it's pretty volatile stuff. But I'm kind of the opinion still that maybe this will fail at some point today. We need to wait and see and give it a bit more time and see what plays out between now and later on in the session. But certainly there could be some potential here if you are of a speculative mind and think that we are going to see a pullback in Euro US dollar or a strengthening of the US dollar. Let's take a look at cable. We can see here that that closed below support yesterday at 119.91, but is almost already engulfing all of those losses that we posted yesterday. So very choppy stuff. And not really too sure what to make of this at the moment. We did find resistance at this key level at 124.30. So I think while prices are below that level, there is potential for a deeper correction, maybe as low as around 116.45. Let's take a look at Aussie US dollar. We've got somebody requesting that today to take a look at. So my overall thoughts on this, we had an inverse head and shoulders that formed back here in November. We saw a decent break to the upside. We saw it eventually hit the measured move target of the head and shoulders. Then we formed some sort of wedge pattern. We broke down from that in mid-December, and then prices stayed below that wedge pattern from the reverse side. But today is potentially a different story. We are now starting to challenge these previous swing highs that we posted in December, just there at 0.6893. So this is the key level to watch. We do have a 50% fib level there as well to keep an eye on. So I think we need to wait and see what happens at this level. If we get a test of this level and it fails to close above it, then that could indicate that we are getting a swing failure and potentially prices will move lower. But it's very speculative to try and trade this now because it has had a very strong move higher. I'll come back to look at that on the intraday charts in a moment. Let's take a look at New Zealand dollar, US dollar, similar sort of situation. We saw a bullish channel form here. We saw resistance at 64.68. Cap the upside. We then saw a break of the channel and prices now remain below it. Yesterday we posted a bearish candle, but already today trying to engulf all of those losses, up by 1.36% already as things stand. Let's take a look at dollar yen. So that's been trading in a bearish channel, and we found some support yesterday. We posted a hammer type candle holding above this 130.56 support level, but today we are pushing back below it. So it'll be interesting to see how we react at the lows that we printed yesterday. Will there be any support there, or will this just get taken out and we'll continue to see prices move lower within this bearish channel? All really eyes on the dollar today, and it is set to be a pretty interesting day, given that we've got obviously the FOMC minutes later today at 7 o'clock. And we've got some jobs data and the ISM data as well. So going to take a look at sterling yen, because we've had a request to take a look at that from Ali. Let's take a look at the daily to start with. So I've got some annotations already on here. So we had a range that was forming on this, and we broke down through that range with this huge impulsive candle that fell through support at 163.06. And since then, we went on to hit the measured move target of this range. So what I did simply was took the range, measured it lower. That came in at 157.00, and we pretty much hit that. Well, we definitely hit that. And then yesterday we posted an attempt at some sort of reversal to try and close above that level. But just closed slightly below it. But we are on the front foot today. So what would I be doing with that? I'm not entirely sure. For me, it looks like potentially there is some sort of topping price action, and I think that the yen continues to look very strong. So I would be looking to buy yen. So effectively selling this potentially on any rebounds, maybe towards 160.00. Hopefully that was useful, guys.
Thanks, Joe. I'll take a look now at indices and FTSE. This is a daily chart in FTSE. You can see we've been trading in this wide range really since the start of last year. January highs, smashed to the lows, up to the highs again, halfway down the lows. It's like a nursery rhyme that I used to know. And yeah, back down to the lows in October. And the rally, the Christmas Santa rally, sort of like petered out in December, really. Although we've revisited it now. Jan has seemed to be a good start for indices. So we punched higher yesterday, got close to the resistance at around 76.30 in here, and looks pretty positive again. Looking at these moving averages, we've got a golden cross. That's a really, really positive sign. I'm not going to get too carried away with it yet. I'd like to see these actual highs taken out, but it's overall, I would be very positive on FTSE above 7,300. On the DAX, we had the golden cross earlier in December, mid-December. That's and we're sort of like working our way higher from there. We had a double top formation just before that, and we managed to hit the measured move target there. Resistance really is around about the 14,600 area. That's a 61.8% Fibonacci level as well, which is the move from the start of the year, start of January, all the way down to the lows, and we retrace 61.8% of it if we get up to those levels. Good start to the day. 55-day moving average has supported really well, and we're kicking on from there this morning. So overall, European indices looking pretty positive. We'll even look at the CAC, which we don't look at very often, but that gave us a little bit of an early indication about the golden cross. That was one of the first markets to do it in 9th to the 12th of December. Looking at the Dow, same sort of price action and formations going on. Golden cross on there was the 12th of December. Oh, no, sorry, it wasn't. It was the 16th. And but price action has been rather muted to start the year. And maybe that they're waiting for the bad news from the Fed tonight about how aggressive they're going to be with the rates increases this year. This is the thing that's really got people worried. We've obviously got concerns about inflation raising its ugly head again. I think it was, we were talking about, who was saying that we could be going, the three major economies could be going into recession this year. I can't remember who it was. It was yesterday anyway. And yeah, that's put a bit of a dampener on things as far as the US are concerned. NASDAQ hasn't been performing well at all. That's below all the moving averages. We've had a little bit of a bounce from the measured move target from the treble top formation that we had, and that's bounced quite nicely from there and just holding above it, but it still looks a little bit shaky to me. 10,650-ish is the support area, but if we do get above the 11,100 level, then that will open up the upside and we should see further gains. But yeah, doesn't really look good, the Nasdaq. Definitely some pressure on those tech stocks, but you can understand it. I suppose the tech stocks have had a decent old rally. If you look at the rally they had from March 20, start of the pandemic, huge old rally. Let's get a little bit of a fib on that and just see. Really, we retraced 61.8%. It's almost as though technicals work. Weird. And we sort of we bounced nicely from there. And we got this downward trending resistance line, which we were capped by at 12,200. That was 12th of December. And yeah, but just looks to be stalling now. So maybe we're getting that little bit of a turnaround. If we get a positive candle this week, we can even drill down and say this is a morning star formation. So let's hope for some positivity in the Nasdaq 100.
Did you see Tesla yesterday, Steve?
I didn't see Tesla. No.
Down 12%.
Oh, poor old Elon.
Bit
I'm
of a
sure he
horror
doesn't
show,
care
the
too
chart
much.
there.
Yeah, we'll have a little quick look at that.
Okay.
Let me see if I can bring it up now. Tesla, Tilray. No, hold on. Here we go. Tesla, what are you going to show us? Yeah, it doesn't look very good, does it? Oh dear. Oh dear. Well, I think we talked about Tesla way back a while ago. Obviously, we drew this line in for whatever reason, because it was a support from back here, broke through it, failed, and then broke through it again and became a resistance. So 180, I think the 100 level, yeah, around about the 100 level should form some sort of support from the resistance all the way back in 2020, July 2020. So it's amazing that that's sort of like the story that's had. If you think about it, obviously there's been a share split on it because it, I know we've talked about Tesla being thousands of dollars, and but it had a share split and it sort of like reduced the price on this chart. But yeah, so that's like a pretty stinky chart, and there doesn't look to be anything really holding that up. But yes, I would expect support to come in around about $90 on Tesla. S&P, that's had a nice like reversal, but then it ran into the resistance on the downward trending resistance line, and we've got like multiple crossovers. We had the crossover from the 55 over the 100. That was the aggressive after the aggressive down move, and now we've had this sideways price action, but we've got a crossover of the 55-day and the 100 gains, which is slightly positive. It'd be more positive if we broke through this downward trending resistance. I'd be a lot more confident then. Support coming in around about 3765, but until we get above, well, today the resistance is around about 4,000. You're still on the back foot with the S&P. Have a quick scan of the markets. A little bit of a bullish hammer maybe posted on the Aussie 200. That wasn't bad then, Stevie, because I did my gun to head on that yesterday. Inverse head and shoulders still forming. China 50 measured move targets way up there, so it seems like a bridge too far at the moment. Inverse head and shoulders of the Hang Seng looking a little bit closer, although we are approaching a 38.2% fib retracement level. So yeah, that's all the way from that move there. So that's, last couple of days have been very positive on the Hang Seng. Nikkei looking a bit poorly at the moment, although yesterday's indecision maybe is hoping to lead to better days for the Nikkei, but doesn't look great at the moment and under pressure overnight. So lots to sort of get excited about, Joe, and lots of different opportunities in the different assets globally. Really shows you where that sort of like every economy is at a different level in their business cycle.
Yeah, for sure. Okay, let's take a look at the gun to the head trades then. So this is where Steve and I pick trade ideas live on the stream. Just a bit of fun, but as if we had a gun to our head, what would we trade right now? Each of the ideas must have stops and targets. They're all placed at market and published to our TradingView profile. So if anybody wants to check them out, feel free to do so. It's at signal_center. We can take a quick look at how yesterday's ideas fared. Let me just bring these up and we can check them out. Give me a second. Okay, so here's our profile. If you go to homepage. You see our ideas listed on here. So I was looking for a speculative short on gold, given that we were seeing some dollar strength yesterday, and nice reversal that we posted on the 60-minute chart at this time yesterday. If we click the play button, we can see that I was actually on side on that one at 9 o'clock when we closed the trade out by a tiny 0.18 R, but a win's a win, so we'll take that. You can see it's roared to the upside, smashing through that stop loss this morning based on the dollar weakness that we've seen. And Steve was looking to trade the Aussie 200, noted that this market was lagging behind a lot of the other indices that got off to a pretty good start yesterday. So he was looking for a push higher on that, and he got it. He has eventually hit target, but sadly that was only at 4 o'clock this morning. But at 9 o'clock yesterday, Steve, you were 1.5 R on side with that. So well done to you. Another nice trade from you on the gun to the head trades.
Got to open up this live account, Joe. What are we doing? Stop hanging
Wasting
about.
time. We're wasting time, mate.
We'll talk about it after this show. We'll go into a little bit more detail on it, and we've got to pick a broker which will allow us to sort of like trade what we're showing on these charts with a minimum amount of capital, because we have to make it realistic as well. There's no point in Joe putting his hundreds of thousands of pounds in the account, because that just like it won't be really relative to a lot of people that are watching the show, which is fine. But we want to be a little bit more realistic and try and help as much as we can. So are you ready, Joe? I mean, I don't mind letting you go first, as I'm sort of like champion at the moment.
Yeah, you are champion at the minute, and I'm going to go with, I wanted to find the chart that best resembled the dollar index, basically, and I think I found it. It's actually dollar Swiss, so this is what I'm taking a look at today. We can see here that prices failed to get above this major level of resistance around 10050. We then pushed lower, and we formed some sort of ending wedge potentially. We saw a break high yesterday, and we noted this on the dollar index chart. Nice breakout of this wedge, potentially looking for a correction higher. We've seen a very aggressive pullback already today to retest the reverse side of the broken wedge. So if this is going to work, it needs to happen right now, because we're bang on the retest of that level. So for me, there could be some potential for upside here. This is the intraday chart that I was looking at. I've got a 1 hour chart here. We can see that it's had a decent pullback. We've got some intraday support levels around 92.60. It's currently trading at 92.67. So that's my entry. I'm going to target and move up to the levels that we saw yesterday. We've got some resistance around here at 93.84, and I'm going to have a stop loss at 92.23. Ideally, the stop loss would be below this low that we posted on the 30th, but the risk reward at those levels isn't favorable enough. It's only 1.62, 1.66. So I'm going to go with that one there. At 92.25, giving me a 2.69 R risk reward profile on that today. So I'm buying dollar Swiss into this collapse that we've seen in the dollar today. So wish me luck.
Okay, good luck, mate. Hamgozi just asked me to take a quick look at gold, which we've already covered, but just as a reminder, just before my gun to head trade idea, but it's relative to gold almost. Inverse head and shoulders formation. This is the daily chart, and it's motoring. It's absolutely motoring away now. Looks really good. Nothing really slowing this bad boy down. 1880 would be the first resistance level I would look for, but 1900 is the major one. So that's a 61.8% fib. So gold, all steam ahead at the moment, but just be careful. You know what this dollar's like. It could smack you in the face. I'm going to go with copper. And we've talked about copper. It's trying to get above this 200-day moving average, but really struggling. We've got off to a good start this morning after 4 negative days. And I think this could continue. If we look at the hourly chart, I'm just going to highlight really the potential for a, right, where's the things? Where's the arrows? Getting all confused in my old age. There's an arrow there. And there's another arrow there. So for me, double bottom formation on the hourly chart, which is like short term, obviously. So if we are to project this higher, let's get a little projection tool on here. Targeting a move to 382. It's like halfway there. It's like a bit sort of, but for me, this is like a reversal formation. Could open up the upside, could actually get that above that 200-day moving average. So if I was to be trading this, I'd prefer to be getting long at 378. It's sort of like quite tight levels, but I've got to get long up here. So my stop will be below 818. There we go. And I need to target a move to at least up here, really, to get some decent risk reward out of here. So it's going to be quite tight because we're talking about quite sort of like significantly small levels here. So getting long at what's that risk reward of 2.8? That's okay. Getting long at 380.18. Targeting a move to 385.79. The stop is at 378.18. So very tight. That should be a quick result either way, if that plays out the way we expect. That's it.
Best of luck. So 2 trade ideas there. We've got a copper long and we've got a dollar Swiss long. Let's see how they play out between now and 9 o'clock UK time when we will close those out. Okay, let's have a look at data-wise today. We've already touched on a few points already. The US ISM manufacturing number is due out at 3 o'clock UK time. That will be important for confidence in the US economy. And also we've got the JOLTS job number due out as well. So that will be important ahead of these non-farm payroll numbers that are due out on Friday. And then we've got the biggie at 7 o'clock, which is the US Federal Reserve minutes. This is the minutes from the December policy meeting, and the narrative on inflation and interest rates will be closely watched to see what impact they have on market expectations. So could be a lot of jostling of positions ahead of that number later today, and expect some volatility at around 7 p.m. UK time. Okay, Steve, that's it from us.
Yeah.
Unless you got anything else to add?
No,
We'll have a chat
good,
about this account, see if we can make this a little bit more interactive and actually put some real capital to work with this as well, and see what we can do with it.
Yeah.
Even though we're at all-time highs on the P&L that we've been running hypothetically. So yeah, we'll have a chat.
Okay.
Right. Have a great day, everybody. Thanks for watching, and we will hopefully see you tomorrow morning. Take care.
Cheers.